So for the next sort of 20 minutes or so, we're going to have a chat about what it takes. We all remember Ricardo from day one, chatting about some of the challenges of emerging markets in general. Ronnie, would you want to do a bit of an introduction of yourself and what Alcubo does?
Sure. My name is Ronnie, co-founder and CEO of Alcubo. We are a transactional marketplace of new homes in Brazil. The way we do that is by not taking the agents out of the transaction, but really empowering them with tools and technology so they can deliver a better and a more streamlined experience for the buyers.
Okay. We've spent the last 2 days, 3 days, talking a lot about transaction-based models, various variations on those models, and so on. And what's very clear is that there's a lot of value, and there are a lot of companies going after that value. Ricardo, let's start with you. How hard is it to really build a business in this sector, chasing the transaction?
Well, first of all, thanks for the invitation. Also, thanks for all the people that are in the back end organizing. This is the last session, so they're always taking care of the details. Everything is great, so thanks to all the team that have worked with you, Edmund, Lola, and all the rest, so thanks for the invitation. Answering your question, I think it's really difficult. Sometimes when people say, we are a portal, we are classified, and say, let's move to transaction, it's like, it sounds easy, but it's really difficult because first of all, you are classified, you are getting paid by the agents, brokers, and suddenly you are like, you want to go and take cut of the commission, revenue share, whatever, but it makes noises. So I think it's difficult, and also it's difficult from the point of view of cash flow, because as we always mention, you make all the spending today and you collect the commission between 3, 6, 9 months, at least on our markets. So one thing is saying we go to transaction, the other was really going to transactions. We started, I think I didn't mention this, but we started like on a hybrid model. We tried to get part paid by marketing and part paid by a commission. So that makes us cash flow break even, and it didn't make us raise money or struggle with that. So I think if you go directly to transactions, it's really difficult, and nowadays with capital restriction. So if you try to find a balance or try to find a way where you can collect money from other revenues like marketing, whatever, and find that transition, it's a little bit easier.
Okay. And what about in the Brazilian market? Has it been simple, or have you sort of started, gone down a wrong road, come back, started again? What have been some of the learnings and some of the challenges in rolling out your transaction model?
No, it's been extremely hard, much harder than we've anticipated. Taking a step back, we started business as a lead generation platform for developers. We had a call center. We're pre-qualifying those leads and delivering those leads to the developers. But as most of you guys can figure that the agents were not really doing a good job on taking care of those leads, and the developers always had an argument with us on your leads are not really pre-qualified, and we never won that kind of argument. So we decided to actually let's take the risk and start building our own sales force and delivering the leads to them, and make sure that through technology, through a lot of automation, we are sure that the agents are doing what they're supposed to be doing. So yeah, it was a process that took a couple of years to actually get it done, and then of course once you are being part of the transaction, you have your real estate license and whatnot. Getting the money is also always a problem, as Ricardo was saying. Sometimes take 2, 3, 4, 5, 6 months. So yeah, it has been very difficult, but in a way we're taking a piece of a bigger pie, get involved in the commission rather than just selling leads like we started.
Seems to me pivoting the business, starting, learning, building some assets, changing direction, repeat. How many pivots would have you had?
Oh, many. I cannot say many. We started like with primary market, with niche primary market, first luxury, and then we realized that makes sense. Then low income didn't make sense. We went to the average. Then we tried to go secondary market, rentals, open days, then return to pure process and doing it online. So I think that what you just mentioned is really interesting because you are always pivoting one way or another from the property or the market you try to go, the way you collect the money. Well, actually, we got also an example that gave us the idea of Cubo. They started factoring with the commissions to the agents, so that's also a good idea. Try to see how you pivot, and you got this problem how you pay the revenue share, the commission to the agent, and suddenly you gotta find a way. So I think pivoting and being creative, it's something that we keep doing. It's not that we are doing more revenue from transactions than classified, but we keep pivoting on transactions.
So how do you build into the business? It's almost like the DNA of innovation, of not being afraid to say, oh, we got that wrong. Now but what did we learn? Now where do we go next? And so on. How do you embed that into all levels?
That's a really good question. It takes us a lot. One of the things is try to have this startup philosophy, culture, and never try to, with all due respect, be a big corporate that cannot be flexible or all this bureaucracy. We try to eliminate all that. You want to try it? Okay, let's try it. No one can say no. What? No, let's try this new idea, let's pivot. And so we try to keep it always simple, flexible, and creative.
Okay. And how do you approach the same issue?
It's a very similar approach. I mean, we have a mindset and a culture of, trying and making sure that we measure, looking at the KPIs. And by setting an example that, the upper management team, it's okay to make mistakes, as long as you learn what the mistake was and get something out of it. So we really try to create an environment that is safe for people to try things, suggest things and make mistakes and say, all right, that's part of the learning curve. Let's make sure that we're not going to repeat that mistake. And like you guys were saying, it's a living organism, right? So we're trying different things every day, and we never had like an aha moment, like, oh my God, that was it. It's a bunch of small little things that allow us to continue to grow the business.
Okay, so when you look back over the last few days and you've seen 30 or 40 different speakers talking about a range of different approaches, are there any lessons that you've learned or takeaways that you've captured? I don't know, question you didn't know I was going to ask, right? That you could actually apply to your business that's going to force you to think about it in a slightly different way?
Like I can go first. Yes, many. Since the masterclass and all the experience we shared, like I was telling, we get an idea of factoring the commission with our Cubo. So like there are a lot of takeaways. For example, how they were just presenting the rental space, the hybrid model. So why we couldn't get also transactions of going to office spaces. We are more focused on new developments, on residential average, and suddenly said, oh, here's also an opportunity. So I think the key thing for us is like we are open to see that we can attack transactions from different angles, and then people all over the world are seeing at the same time, like always trying to get the pool of commissions, but from different angles. So we can share a lot of things and we can try it. And one of the things also is you can try it really quickly, just do an MVP. One of the things we try to do, Simon, is when we get this new idea, is they always come with, I need money, I need all these tools, I need all these outsourced services, I need all these employees. No, go and test it. Just go and test it and see what happens. Do it manually. If you want to do a chatbot, do it manually. Fake it till you make it, and then we invest and we try it.
Okay. How about for you, Ronnie? What have you learned over the last few days?
A couple of things, not only on the sessions, but actually, networking, talking to a lot of people here. A lot of people are trying to go after investors, not only institutional investors that buy, in a large chunk of units, but also, as a personal investor, of course, people tend to put a little bit of real estate on their portfolio. So that was, something that we've thought about it, and I heard some successful stories. So something that I really want to try it with the team, hopefully on the next few weeks. And so yeah, I think that was the main thing that I really want to take it away and actually, test it as soon as possible.
Okay. Can we put the questions up, please? The questions come through is, how do you think about market share and generating network effects?
That's a good question, though. In terms of market share, we're pretty, the Brazilian market is super fragmented. You know, market leader has 8% market share. We got around, you know, 2%. So there's still a lot of room to grow. And this is something that we are always looking at and, you know, trying to go after it. And network effects, that's it's a tough question. I mean, the way we see it, the more, you know, technology and automation we bring to the process, the more that the agents are going to be able to really focus on the highest return of their time, which is, you know, spending time with the buyer, creating that connection. Because, you know, buying a real estate, at least in Brazil, it's a very important decision. You know, taking a debt for 30 years. So our whole goal is, you know, the more automated, the more intelligent the technology becomes, the more time agents can spend with people and more units that they're going to be selling, right? So it generates a flywheel, and that's what we're trying to do and pushing, and we're starting to get a good traction on that wheel.
In your markets?
So one of the things, these are emerging markets, and one of the great news is that in emerging markets regarding transactions, there's no clear leader. You got these big players, but they're all trying to win the industry. There's no one. So regarding the you know, I think we see an opportunity there. Nobody owns 50, 60% of the market. So it's also really fragmented, depending if it's primary market, secondary market, I don't know, whatever. So we try to start in primary market that we know that is between 7 to 15% of the sales market, between primary and secondary. So we try to go and capture 30% of the primary market in sales. That's like our benchmark. They say we can move here and we can move quickly with the average product. And regarding the networking, it's really good because we got these two situations as a portal that you gotta give your own brokers and agents tool to grow, make more revenue. And on the other hand, we're also competing with them. So it's a balance. We launch products that benefit them, and maybe we launch some products that cut them commissions.
Okay. Now, do you think the digital transaction model is similar to the portal business, or is it really completely different? Or are there really some learnings you can take from one to the other?
I think it's very different. I mean, every day, every first of the month, we're starting from scratch, right? So as a portal, you're getting SaaS revenue. So there's a little bit of more of a security, if you will. So I would say it's much more stressful. It's much more challenging, and especially when the economy is not going so well. You know, interest rates, inflation going up. You see the decrease of, you know, people buying houses, and the decision-making process of actually making the purchase is getting longer and longer. So I'm not saying that the portal is not a challenging business, but, you know, it's a little different, and so that's the way I said it's definitely a little different.
A key way we have, sorry, is that, as Ronnie was saying, classifieds, it's a subscription, and you get monthly recurrent revenue. We try to take that learning and put it on transactions. What I mean is, for example, when we start working with a developer, we try to plan 6 months, 1 year, and not these boost campaigns where you sell a lot of units and then next month, 0. So we try to say, let's try having this recurrent sales per month, and we control it. If we got like really good campaigns, we are performing well, we give them a certain result, we try to back off, and that's against revenue, I know it, but we want to keep some of that for the next month so we don't have these spikes in revenue.
So you're smoothing the revenue.
We try to smooth it. And that was a learning from the classified.
Okay, so it makes it, that makes it easier to project forward and plan, rather than you never quite know the lumpiness within the business.
Yes, and also regarding the revenue we collect from the developer, we realize that they prefer paying smoothly or monthly recurrent than not coming 1 month and giving a big paycheck that they're gonna find one way or another an excuse or cutting a little bit of that pay.
Okay, so we've talked a little bit about the challenges. If you were to think about, you know, the business, what's been the one big mistake you made? That if you would go back in time and you could change, big operational mistake that you've made, what would it be? How would you then change that? Well, what would it be, and what would have you done differently? Probably a better way to put it.
I think that a a big mistake that we made was early this year. We decided to really push hard on the lead generation campaigns, and we didn't increase as fast the amount of people and amount of the sales team. So we're flooding the agents with leads, and of course, after that experience, we found out that agents they must have a cap on how many leads they should have within the CRM, and we spend a lot of money with Purple's app, investing, and we didn't see the volume of the transactions increase on the pace of the investments that we're making. So that was definitely a tough lesson to learn, and that is something that is still fresh on my mind. So it was a tough one.
Yes, we also have a tough one, is that at the beginning, our expectation and our promises of transactions were like really high, and you never achieve that. You go step by step. It's like we always say, like a baby starts crawling, then it walks, and then it runs. We thought that we were gonna run, and we went with this promise, expectations, whatever, and we burned many relationships because they expected much more than what we delivered. So I said, no, let's move smoothly. Let's keep our promises, that we can achieve them with a margin of error, and we'll continue building much more better and longer relationships. So we wasted a lot of relationships, then we recovered them, but it took much more time.
Yeah, so it sounds like sort of two issues. One is when you're planning and you're forecasting, be conservative, put in place, until you've got confidence, don't push too hard, not too many hockey sticks and so on. And then I think the other learning you're talking about, which reflects on how you think about experimentation, is all about don't put all your money on 6 black or whatever it is, right? You're actually going to just put a little bit on, see if it works, and then expand once you've got confidence. You flooded your sales guys with leads, and you burned a lot of money in that process, and it created a problem, which now you've fixed. Now, Ricardo, do you see Infocasters dropping the advertising portal model completely at some point and just being transaction only? And are you offering mortgages?
It's a really good question. I always put some thought around that. I would love to be like a pure broker and go and compete with all the agencies around Latam. I think on short term, no, because the classified, in our case, is a cash cow. It's really profitable. We got really good EBITDAs, and now it's the one that's paying all these new tools that we are building. So on short term, no. On middle or long term, I don't know, maybe. Maybe it can happen.
Related question. You get to see leads generated by your own site as well as leads generated by other sites and other mechanisms. Honestly, how good is your site at generating closable leads?
Regarding pure honesty, regarding the quality is the best. Regarding the quantity, no. You can get much more leads from Facebook, from Marketplace Facebook or some other networks. You can get much more volume of leads, but the quality is not so good. So you gotta be careful, because at the end of the day, if people or companies develop these great tools for processing leads, they will be cheaper getting leads from Facebook or Instagram than portal. And then that's a fact. You got our agents doing, I don't know, Instagram posts or TikTok or whatever, and they're getting leads. The problem is they don't know how to process that volume of leads. That's the advantage we have right now.
Right. So it's a combination of cast the net wide but smartly, and have the right systems and processes behind you so that you maximize the yield per lead.
Yes.
Okay. What are your best current lead sources? Clearly, we just sort of touched on that a little bit. And what do you project will be the best lead source in 2 to 3 years?
Currently, we get the majority of the leads coming from the two largest portals, Grupo Zap Imóveis and Viva Real. We've been trying to get out of that dependency, if you will, slowly, and so we're looking for different sources. We're investing more and more on our own platform, but the organic, the SEO, it's going to take some time to get there. But I think the current business model really doesn't really matter for us on where the lead is coming from, as long as they're converting, and the cost of the transaction, it's reasonable, positive economics. So I don't know where it's going to be from in 2 or 3 years time, but what we're really pushing is to get a little bit of a more of a less dependency on the number 1, 2 portal and become more have different sources. But we'll see what's going to happen.
Okay, last question. We're in an environment of, we've talked about it a number of times, right? Inflation, interest rates going up, and lots of challenges. Now, I know Latin America is forever movement of interest rates and currencies and all that sort of stuff. How do you think this is going to impact your business over the next 24, 48 months?
I think everybody, we have a joke in Brazil that we got a master's on dealing with all these kind of problems. It's been within the economy over the past 20, 30 years, so it's nothing new for us. High inflations, high interest rates. I think that what I can see right now, which is really taking an impact on the business, is the lead time on the transaction. People are taking more of a careful approach and taking a little longer to make the decision to buy. But at the end of the day, I think there were a lot of small brokerages that came on board just because the market was really, really hot last year, and all of these guys are running out of business. They don't have a strong cash flow position to continue to run the business with the current situation. So I think it's going to be good. It's, less professional people will come out of the market, and it's going to open up opportunities for us to take more of on the market share. So our current view is it's going to be tough, but it's going to be good, and whoever getting on the other side, we're going to become stronger.
Yeah, I agree. One of the things that we got to take in consideration regarding emerging markets, and specifically Latin America, it's been nearly 20 years of growth. So there's a lot of people that increase their income, and they're like, have better salaries. There are a lot of things that happen regarding the economy. So we are far away, but millions of housings that they are missing. It's not that. We gotta push that a lot. So it's continued to happen, and mainly there are not many mortgages in our market. So it's not there's not a bubble in real estate, whatever, that can blow, because we have already high. The banks it's really difficult to get a mortgage. So what I try to do is, I think there's going to be, for the next couple of years, we're going to continue to grow. Obviously, there's a lot of noise around in the world, but some markets of Latam, people are, putting their money or their money there. And also, it's like with all this market crash, housing is also where people feel comfortable. One of the things is that we continue to build with the brick, the size of a brick, and that comes from the Romans, that they could get it with the hand. So the brick is the same size. Now it's industrial brick, but it's more or less the same. So you see the market crash, stocks, bonds, whatever, people are going back to the basics, investing in real estate. So I think it's going to be a couple of years interesting.
Yeah, understatement. Okay, so Ricardo, thank you very much. Ronnie, thank you very much for sharing your thoughts on what it takes to build one of these businesses. Excellent.
Thanks, Simon.
Your phone.
Oh, my phone.
Thanks.